Hi everyone, Stuart here. It's Tuesday the 13th of August and it's risk aversion and it's continued to gaining momentum, so a big risk off mood in the markets continues to run. Here I've got the dollar yen chart here. It's at that daily level, so we're down at this 105.25 level yesterday. We spiked to 105.5, so 105, big round number, next level down. Obviously risk aversion, the yen gets a bid, the Swiss franc gets a bid, and gold in particular gets a bid. So let's just have a look at those three key assets. Obviously we've also got a bid on government treasuries as well as yields continue to fall, but let's have a look at these three key assets that we have a look on a much more regular basis. So here on the daily time frame, RSI at 28 for dollar yen, suggesting we're in an overbought zone. But remember, the overbought area oversold area, I should say, can go on for a long while. So what's the higher time frame charts telling us? So if we take it up to the weekly chart, you can see this level from this spike, this low we had on the 2nd of January, where we went all the way down to under 105. So 105 very much in focus, but even higher up on the monthly time frame, we can see that 103.50 is the next big level from the summer of 2016. In that period there, the 100 level never actually we sort of spiked to a few times intraday. But we never actually settled down at this low level. But this is the monthly time frame. So even as low as 100 is certainly on the technical levels here as the dollar yen unwinds here. So we've had a very strong 4-month move down here for dollar yen, and we see where we're going here for 105 break. So 103.50, and then the big psychological 100 level for dollar yen on the higher time frames. Gold's another interesting one. Remember we talked about this 1500 level being a key Fibonacci level from the weekly move down we had last year. So let's take this up to the weekly chart. You can see some of the key levels coming into play here. So this is this big move down we had last year as we moved all the way down from this high here at 1360 all the way down to 1160, and then we've recovered that this year. And this summer it's the exact inverse of where we were last summer. So we've recovered through the 100 level. The key level we talked about 6 weeks ago was this 161.8 level at 1500. That's been breached quite significantly. And today we trade all the way at 1520, 1525 at one point today. And again, if we take this up, admittedly, obviously this is up at the monthly time frame, but again, where the levels at these higher time frames, where the market may go to. What's the potential upside if this rally continues? Well, and the talk of recession actually comes to fruition. Not that I'm suggesting it will, but that where could the market run to? Well, our famous Fibonacci levels take us all the way back to 1700 for the gold troy ounce. So 1700 here, the 261.8 Fibonacci levels currently sits at 1695 level here, which takes us all the way back to the spring of 2013, and that isn't that far away, because today where we've been here at 1525, we're back here this same month here, April 2013 I should say, and this takes us back into 2012 I should say, a few months earlier than that, at this 1700 level. But it seems a long way away, but so did 1500 when we were down here earlier this year at 1275 and that 1287 key support level on the Fibonacci level. So that's where our key risk off assets may travel to if this trend continues. Meanwhile, intraday, euro is slipped back under the 112 area. We got support intraday here at 111.85 again, where we had yesterday. It was sort of holding there, so it's held relatively well. We've had German inflation so far today. We've also got US inflation this afternoon. We got UK earnings this morning as well. So the pound again slipped here on yesterday. We were down here at 2015 zone. We recovered a wee bit overnight, but again it's slipping back down this morning. It's triggered short earlier this morning, and it's tripped down, and we've had a low so far today of 120.41. so far today, but drifting down. So earnings and unemployment data from the US, from the UK later on today. And the Aussie, that's the other one I was going to talk about today. Again, moving down. Aussie under pressure because of the increasing tensions in Asia in particular. Obviously, we've got the situation in Hong Kong. We've got the trade tensions between Japan and South Korea, as well as obviously the main one between the US and China. So lots of worry floating about the market. We've got a very risk-off feel to the market. So those key assets are certainly taken the bid. So watch the gold, watch the yen, and watch the Swiss franc as we go forward. So Swiss franc intraday. Here, the key 97 level, which we've had on the daily time frame, has become key. But again, like the other assets, let's just take this up to these higher time frames. So on the weekly time frame, we've been down here at this 97 level. Next support is this key Fibonacci level down here at 95.80 level, which takes us to a level from September last year. But also, if I zoom this up a bit, if I zoom this in a wee bit, you can see also takes us back to these levels back here. Actually, that was a monthly one I was wanting to show you, wasn't it? If I zoom that, sorry, let's zoom that up. Excuse me. Zoom that up a bit. You can see it's a monthly level that takes us back to September 2017 as level. So the daily time frame takes us down to this 95.80 level, but also it's a key support on the monthly time frame, which takes us all the way back to March 2017 as well. So these key risk-off assets very much on the bid at the moment. So I'll leave you with intraday on the euro. We're down with support at 111.85 and resistance at 112. Big round number for euro today. So take care. See you all at the webinar and watch those risk-off assets. All the best, everyone. Bye-bye.